printing of money, the monetization of debt, is a last phase in a long-term debt cycle because it indicates that when there's a lot of debt and there's a zero interest rate and you print that money, that debt monetization has its effects. So what we're seeing now in the market is very, very, very classic. It's happened repeatedly in that enormous amount of buying power created by the creation of money, which doesn't raise living standards, that is passing through the system. And so you're seeing it happen in the inflation of goods, services, and financial assets. There's a trade-off that I think everybody has to understand, and that's related to the second. With the large wealth gaps and large not enough money in lots of places, the Federal Reserve and the Treasury were put into a position of needing to get checks out. And there's also this left-right conflict issue having to do with the wealth gap. And that means that you have fiscal policies that are now requiring lots of spending. And so the question is really, are the consequences of not doing that better or worse than the consequences of doing that? Now, when we look from an investor's point of view, or an individual's point of view, we have to remember that you can't raise living standards by just creating money and credit, particularly if you don't raise productivity more than that. And that means that those asset prices are going up. So we're in the phase of the cycle, very classic, that the financial asset prices have gone up because you've given them more money, that demand is going up, and now we're having inflation of those assets. So if a lot of that buying power is going to be pulled back, particularly as we go into the next year. But there's still going to be a lot, and there's still going to be a high level of inflation of those types of assets. So the trade-off is always the question.
Right. Okay, so quickly, where do you come out on that trade-off? Is it a binary yes or no?
It's a reflection of the state of where we are in the cycle, that we have borrowed. It's all the problems that we've gotten ourselves into by acquiring too much debt and spending more than we're earning rather than being more productive, and also not distributing the opportunities and the incomes in a way that it's a broad-based prosperity. So on the one hand, you have a prosperity that the bottom 60% of the population isn't participating in very much. And at the same time, you have, so it's creating that polarity, and at the same time, you have the financial markets. So those are trade-offs that, different people, the only thing I care about is whether we're productive, whether we increase the size of the pie through productivity and then divide it well so that you create something closer to equal opportunity that produces greater political stability and also draws on the population going wide. And the reason I say that is because I've studied these empires, these dynasties, going back since the last 500 years. And you see the same thing happening over and over again. When there's a financial problem, when the granaries are empty and the coffers are empty, they print money. And when they print money and the coffers are empty, it devalues money. And with that, when you have a large gap of people at each other's throats, then you create a risk of an internal conflict, a risk of some kind of civil war. And that is what I think is we're at risk of.
Yeah, I want to get to that polarization in one sec, but just quickly on inflation rate, how concerned are you about it?
I'm significantly concerned about it because the amount of money and credit that has to be produced
right.
and is budgeted is a large increase. And yet, if it's not spent, it produces its own problems. The markets have a sensitivity to that. So what it means, and then there's a supply-demand picture for bonds. And the way it looks is if you should get the selling of bonds, it worsens that supply-demand picture, because the way it works is the Treasury borrows and runs a deficit, but it can't produce money. So it has to sell bonds. And when it sells bonds, if there are not enough buyers of those bonds, then the Federal Reserve got to come in and print money and buy those bonds. And the world right now is invested in US dollar denominated bonds, pension funds on the 60-40 mix, and they have negative real returns. And cash has a lot of negative real returns. So if there was a selling of that and a moving to other assets, stocks, other assets, commodities, other assets, or other places, other currencies, other real estate and the like, that selling worsens the supply-demand picture. And then if there's not enough demand, that means that the central bank has got to come in and print more money. So yes, it's not only the inflation that's in the pipeline or projected in that supply-demand balance, but it's also what it could be if there's a selling of debt instruments. Buying power, which comes in the form of money and credit, when that's produced in a quantity which is much greater than the incremental production of goods, services, and financial assets, drives those financial asset prices to go up. It's an extension of what was happening before that brought about populism before. And I don't think that there is a plan for dealing with productivity. If you want to raise your living standards as a country, it's like raising your living standards as individuals or companies. You have to sell more than you spend, and you have to take that savings and build a good balance sheet. And you have to employ people productively. If we don't have broad productivity and employment, which comes from education and jobs programs and such, then we're going to have a continuation of the worsening, the greater polarity, and I think that that'll be a problem. So yes, that's something that has to be dealt with. History has taught us these things. I've studied the last 500 years of history in cycles, and these things repeat over and over again. Large wealth gaps with large values gaps at the same time as there's a lot of debt and there's an economic downturn produces conflict and vulnerability, and that will be with us unless the economy is good for most people. Most people could be productive and effective and benefit.